Hey, Seattle real estate buyers, sellers, renters, and investors. This is your real estate market update. I'm Kwasi with John L. Scott. The real estate market is changing so fast it's making heads spin. And unfortunately, the media is doing more to terrify than clarify. And in this video, I'm going to share industry expert opinions, facts, and trends so you get the most current information. And remember, knowledge is only potential power. Taking action with that knowledge, now that is power. So I'm going to give you real estate news that you can actually use. To make sure that you get these market updates in the future, make sure to smash that subscribe button and click the bell to get notified. With that, I'll start with a high-level overview of the market and then dive into the Seattle stats. At any time, you can click on the chapters and the minute markers to skip to the section that you want to hear. And with that, let's get started. Recession and market crash are being used without context and confusing people when it comes to real estate, which is why it's probably the thing that most people want to know about, or it's what they're waiting for. And if that's you, you need this market update more than anybody. First, a recession doesn't equal a market crash. In fact, nationally, 4 out of the last 6 recessions, real estate prices actually appreciated, meaning they went up even though we were in a recession. What everybody remembers is when the market crashed in 2008. However, in the other recession where home values dropped, they only dropped by less than 2%. If we look locally in King County, the values only dropped in 2008. The other thing that you need to know is that real estate prices were projected to go up in 2022. Those experts adjusted their forecast after looking at the interest rates jumped, and they actually increased the home price projections. Take a look. I think the increase in projections is because the demand is still there and inventory remains fairly low. So for all the buyers out there that are waiting for the market to crash, don't wait too long because you might get priced out of the house or the neighborhood that you really want. For sellers looking to buy, you could be looking at the best of both worlds. Get the price for your house and more options for homes to buy than we've seen in years. And investors, this could be a great time for you to 1031 exchange or start to liquidate that portfolio if that's been in the cards for you. In the next segment, I'm going to talk about interest rates, affordability, and some high-level options to get you the deal in today's market. Stay tuned. Interest rates fluctuating and their effect on home prices is the other big question that we get from people. Let's take a look at how interest rates and inflation are impacting home affordability. Take a look at this graph from the NAR. Home affordability is at its lowest since 1990. This graph shows that monthly mortgage payments rose from $1,265 to $1,944 in the last year. I shared with you earlier that home prices are projected to continue to go up. So how do you use this information? Well, renters and buyers, while you could expand your search area and your criteria, another thing to think about is an adjustable rate mortgage, or often called an ARM. You can also do what's called a 2-1 buy down. Now, ARMs got a bad rap during the crash, but can be a great tool right now for home affordability. You get in at a good monthly payment for you right now, and you refinance when rates go down, which they often do during a recession. A 2-1 buy down is another loan where you can buy down your rate 2 percentage points in the first year, 1 percentage point the year after that, and in the third year, you go to your fixed rate. Well, if rates go down in a recession, that would be the perfect time to lock in that lower rate when you refinance. Now look, these are high-level ideas and something that you need to talk to your mortgage specialist about. One other thing I would look into for first-time home buyers is down payment assistance and grant programs in your area. With inventory going up around the country, getting your offer accepted with these types of loans is going to get easier and easier. Renters, with rents continuing to skyrocket across the country, getting a great loan and having a plan to get it to a fixed rate at some point in the future is a great hedge against inflation. Next, I'm going to jump into the Seattle stats and trends to show you what the market is doing here locally. So stay with me. Okay, let's jump into the Seattle area stats. I'm going to break down the single family, condo, luxury, and new construction markets. While I'll show you the stats for each of those markets, but I'm going to focus the conversation on what I think you should know and how to use the information. So let's get after it. In the Seattle single family space, the number of homes for sale is up 45.1%, even though new listings are actually down 15.7%. That just means that we aren't absorbing or selling all of the homes for sale. Some are sitting on the market a while. The average days on market right now is 16. With homes not selling as fast or with as many offers, there are advantages for both buyers and sellers. Buyers, obviously you have more choices, less competition, which is good for you. Sellers, you might be wondering, well, how is that good for me? Well, even though inventory is up, with only 1.4 months of supply, we're still firmly in a seller's market. The average sales price in Seattle increased a reasonable 3% over last year, but the median price is up $30,000 over last year. So sellers who need to buy and sell, you could be getting the best of both worlds. Seattle condo owners, please hear me. With inventory levels rising, you are close to being out of a seller's market. Currently, you have 2.3 months of supply, with new listings coming on from last month being down 18.5%. The average sale price went up a reasonable 4%, and the average days on market is 22. My advice for anyone thinking of selling a condo and your HOA financials aren't the strongest, or especially if they're weak, I would say hurry up and get out. Buyers, if you want the best rate possible with less risk down the road, you will want to make sure that those financials for that HOA are strong. Also, more financing options are available when the HOA is solid and has good financials. For example, FHA has been raising loan limits and other down payment assistance and grant programs are available. In Seattle, you can get up to $55,000. In Tacoma, you can get up to $30,000 in assistance. Every dollar counts in this market, and up next, we will dive into the Seattle luxury market. In the luxury market, inventory is continuing to skyrocket. It's up 197% from last year, and we're currently at 2.1 months of supply. And so at the current pace, we're gonna be out of a seller's market pretty fast. In fact, new listings are up 50% from last month, and the number of houses for sale is up 113%. The average sale price has had its ebbs and flows this year and currently is below 2% appreciation from last year, and the median price for this month is slightly under where it was a year ago. In a shifting market, the median sales price is one you really want to keep your eye on. You will definitely want to make sure that you smash that subscribe button and hit the bell so that you get notified when I post a new market update. Up next, new construction. You will want to hear how new construction is impacting inventory. Stay with me. Inventory is still the story in the new construction market. In July, the amount of new construction inventory actually took it out of a seller's market. Now, new listings are only up 6%, and the amount for sale is up 17.3% from last year. The average sale price is up about 3%. Now, as I mentioned in the luxury segment, it's important to keep your eyes on the median sales price in a shifting market, which in the new construction sector is up $50,000 over last year. Another thing to keep in mind with some of these new construction sites is they have maybe a unit or two that are for sale, and they still may have other units that are waiting to hit the market. Make sure to stay tuned to this YouTube channel to stay up to date on what is happening in the Seattle new construction market. Next is some closing thoughts on how to use this information, as well as some free resources, so you definitely won't want to miss it. Here is my take on this month in real estate. More inventory means more opportunities for buyers, sellers, renters, and investors. We are getting back to a more normalized market, which is healthy. In regards to financing, yes, there are more creative products coming out every day, but these are not like the loans that caused the Great Recession. Buyers still have to truly qualify for these loans. As far as prices and projections on value, I lean on the industry experts for forecasting. As I mentioned, they are projecting even more appreciation for 2022 and appreciation continuing for the next 5 years. So if you are a buyer, you can rest assured that the market is predicted to continue to rise, so you can get good value out of your house. Sellers, you know that the market is likely to go up, so it's just a matter of looking at the timing of your next move. This is also considering the national stats. Seattle has been outperforming national stats and will most likely continue to do so. Our local economy and high-paying job market will most likely help the continued growth in our real estate market. If you want stats from this video or free resources for your home search, preparing to sell your home, or you're interested in off-market properties, feel free to click on the link in my bio. Make sure to smash the subscribe button, like and comment what you thought about this video, or type in your questions. Me and my team are always here to help. And until next time, peace.